Welcome to Pumpy Pump Crypto. I'm Nate.
And I'm Erin.
And today we wanted to discuss the topic of ETFs, that's exchange traded funds globally that hold Bitcoin. If you guys like this content, please hit the like button, subscribe, and share this with other people who will find it interesting. Our purpose with this channel is to try and help provide good, solid, fundamental education for Bitcoin and crypto asset investors. So if you guys like the content, share it with other people. Additionally, in the comments, we're starting something new. We doubled our subscribers, guys. It's really exciting. We're at 14 subscribers now. We are going parabolic. We will be starting contests, actually, too, with giveaways. But before we get to that point, we have a new segment we want to start, and I'm going to have Erin tell you guys about that.
So I'm really interested in learning more about what people are doing worldwide using crypto and how they have crypto success stories. So, like, for example, I have a friend who had some Dogecoin and ended up, that's how he bought his house. He never would have bought a house otherwise. So I want to hear more stories about how crypto in general is helping people do things they might not have ever been able to do.
Yeah, and so positive stories about how how crypto affected you or someone you know in a great way.
So just share it with us, and then if you share with us, we'll talk to you, and maybe we can set up an interview.
Yeah, if you want to show up on camera, if you don't, if you want to just write the story, we could read it out loud, whatever. But yeah, we want to bring that positivity to this space, and we want to show people the good that not just Bitcoiners, but everybody in the crypto asset space, the good that we're trying to accomplish in the world.
And also we want to hear small stories from everyday people, not just about institutions because that's a lot of the news we hear is about institutions and crypto.
Yeah, not just the whales, also the crabby octopi.
Yeah.
Okay.
So without further ado, we wanted to talk about the ETFs that we've been looking into. So first of all, we've got the Canada ETF that holds Bitcoin. This was approved earlier this year, and the first one launched in February. And these are non-currency hedged versions. And the ticker symbol is BTCCB. Okay, so that one's interesting because it's Bitcoin based, so that's good to know. There are also, is there any more on here? Let's see. Yeah.
So is this a physically backed ETF?
An official ETF.
Or a futures ETF?
This one is physically backed because look here. If you look lower, it talks about how they talk
and
to an official.
And it also says in blue there.
Yeah.
That hold Bitcoin directly. Yep.
Yep. So that's what I wanted to talk about, the difference between the two, because there are different versions worldwide. But what was interesting about this is the reason they have this ETF structure is because it produces daily liquidity and it adjusts the price based on that. So that's very important because if you look at, for example, Grayscale, there's a huge gap in the price of actual Bitcoin and then Grayscale's price. So that's something that's important to note.
Yeah, given the fact that Grayscale is actually a trust, you don't actually own the Bitcoin. You just own shares in Grayscale. Grayscale physically owns the Bitcoin, but you don't own that Bitcoin. You get a share of Bitcoin that you're controlling, but it's not. They take a cut. With the futures-based ETF, that cut goes from 2%. My understanding is to more 1%. So it's a little better, but when you get to a spot-based ETF, I mean, really that's the holy grail for the investor because you're going to have those premiums and those discounts are gonna be less because they're not leveraged, in the same way that a futures ETF or even Grayscale is sort of having a leverage effect that occurs from time to time. You'll see sometimes days where Bitcoin pumps 3%, Grayscale will pump 5%, and if Bitcoin loses 3%, then Grayscale might lose 5%. And it can even work in vice versa. I mean, it depends on this other thing called contango or backwardation. I really don't want to get into that because I don't really understand it very well, but it does have to do with sort of this self-fulfilling prophecy that if, the future price of an asset, they think it's going to do well, then you get into this contango thing where it becomes self-fulfilling and it trades too high, higher than it should. And then backwardation, my understanding is sort of if you get into a bad situation with the price, it also gets amplified as well.
Yeah.
something like that.
So that's important because it's not a direct reflection of the price of Bitcoin. So that's why we want to talk about the countries that are either using like a Bitcoin based one or have other things that are Bitcoin based, and then some that are doing futures, for example.
Hey guys, if you like this content, please hit the like button and please subscribe to our channel. Also, please remember everything in the show is not financial advice. We're just
sharing information about crypto.
I had to burp, so I couldn't talk.
I'm sorry, I just filled in for you. So one of the things that I think that's important in this article is, if you look here, it says if you just hold futures and roll the futures, you'll have a risk of underperforming Bitcoin over time because it prices into futures prices as opposed to a current price. So just what Nate was saying. This is said by the founder and CEO.
Yeah, so my mom, for example, she's been holding GBTC because she only has traditional investing vehicles. And, if you look at, she also has some spot Bitcoin, and we do too. And we also have GBTC in our Roth IRAs, but those have vastly underperformed compared to holding spot Bitcoin. Like our spot Bitcoin, in a year is probably about 6x. And I think GBTC positions overall have maybe done 4x. I want to say 3 or 4x. And still, we're trading at a significant discount as of today, hoping that discount gets filled over time and actually turns back into a premium. That's what I'm gambling on with my GBTC position right now. But that's a topic for another video.
Yeah. So we'll go ahead and talk about some other countries. So in Dubai, they are also trading and I don't know why it's not coming up. There it is. They're also trading. Basically, it's a Toronto listed Bitcoin fund that's dual listed. And this is the first fund, basically ETF, to be brought to the Middle East. And basically, this is important because a lot of the Middle East, they want to kind of trade in real time because, of course, as you go across the globe, the markets close at different times. So this is important for them because it's the only one that's in the Middle East right now trading. And this one did not say if it was Bitcoin backed, and I could not find information on that. So I don't want to say anything about that being Bitcoin backed, but I did want to explain that there is this this ETF that is for Dubai, so for the Middle East. So that gives them their access.
That's interesting. So yeah, so it's for the Dubai market in their time hours, 24 hours a day.
Yep, that's what they
So I wonder if this is just for private, high net worth, accredited or sophisticated type investors, or if it's for institutional investors, including sovereign wealth funds have expressed interest in the listing. Okay, that's big. And also big, if you guys have been paying attention to what's been going on recently on Pomp Brothers Best Business Show, they recently interviewed Kevin O'Leary, Mr. Wonderful from Shark Tank, and he's been talking a lot about, they specifically discussed sovereign wealth funds and a gigantic conference of some sort, or a meeting that Kevin O'Leary was alluding to would be occurring in Saudi Arabia. I think he was saying in the next week or two. So
watch for news on that.
Yeah,
because that'll be a big front. There's a lot of money in Saudi.
We lived in Bahrain for 1 year, by the way, when we were teachers abroad. So we were right next to Saudi, and there's big money there, huge money. So
lots of oil money.
And sovereign wealth funds, that's a big deal. That's where nation states want to store their money. So we're talking about big oil, thinking about what can they do with that money long term, and they do see crypto as an option. So
that's an important.
We'll see what happens.
Yeah, we'll have to see where that goes. All right, so here is the newest news, which I think this was this morning or yesterday at 4:31. So here we've got Australia. They have just got the green light to do their cryptocurrency related ETF. So what's interesting to note about this is they released a set of guidelines and requirements for these products. And if you look at here down further,
ASIC. I love how they're you know what ASICs are?
Yeah,
I was
gonna say they're computers.
Yeah,
bit miners.
Amp miners. Yeah. Application-specific integrated circuits. But in this case, what is it? The Australian Securities?
It's their division.
It's their SEC. Yeah.
So the new guidelines allow funds to launch the ETFs directly in cryptocurrencies or in crypto-adjacent assets such as crypto miners and coin exchanges. So that's good to know. What's interesting, too, is when you look at their Bitcoin ETF, it's going to be required to have these best practice guidelines, most notably strict rules around asset custody. So they're looking into having like cold storage, not connected to the internet, and wallets.
Probably multi-sig wallets, I'm hoping. That's best practices too. Multi-sig essentially means that the private keys aren't being held by one individual. There's all these different security.
And if you look down here, it says the wallets in which the keys are stored are subject to robust physical security practice.
Robust physical security practice.
Numerous backups.
Indeed.
Okay, so they're looking into keeping it secure. So their guidelines, what asset will be considered, has a high level of institutional support for the asset. So it has to have basically like lots of notoriety. A number of reputable service providers for the asset, a mature spot market, a regulated futures market, and transparent pricing mechanisms. So right now, the only two that are doing that are Bitcoin and Ethereum. But they suspect in the future other cryptocurrencies will be expanded into this ETF.
Yeah, going back to that and talking about sovereign wealth funds, institutional money, the Korean Teachers Fund. Why are they interested in Bitcoin first? Well, we're talking about conservative wealth management firms. This is old money that is interested in preserving wealth for people to retire, and people who don't have a lot of money, like teachers. So when those funds talk about allocating to crypto, they're specifically talking about Bitcoin first, Ethereum second. By the way, guys, shout out to Ethereum. Yes, I'm a Bitcoin maximalist. Of course, I hold Ethereum too. But guys, Ethereum broke its all-time high last night. Yeah. Anyway, what was I saying?
Oh, you were talking about Korea, but I want to make one point too, because we also lived in Korea.
Yeah.
Another point to make when you're looking at Korea and how and when he's saying conservative, what he means is you're looking at a country that has a much larger middle.
Fiscally conservative.
Fiscally conservative. They have a much larger middle class than the United States, and that middle class is very interested in preserving their wealth, having a nice retirement.
As a percentage, like as a proportion of population, she means the much larger middle class. They do.
Obviously, they have a smaller population than, but anyway. So when you're looking at that and they're looking at Bitcoin, that means they see the reliability and the future growth and potential of that. And we're talking about, like he said, a very conservative country in terms of how they save and their wealth.
Yeah, a lot of people forget also that a lot of the retail speculation that drove the 2017 Bitcoin bubble was South Korea getting in the game, and Japan and Asia. So, I think it's always bullish. But what I wanted to say, this part here that's highlighted in green, when we talk about a mature spot market, a regulated futures market, and transparent pricing mechanisms, what does that mean when you hear that sentence? Well, a mature spot market means they want a number of years. We were talking about this morning when we were on our run, right? Are we going to do we see Australia choosing Shiba Inu? It's only been trading for a few months, right? So the first issue there is mature spot market. It needs to have demonstrated a number of years. They're probably also going to look for some sort of a like what percentage of the top holders are actually, like, do we have too many whales? Are whales holding 85% of the supply, 70 or 60% like they are in a lot of these small cap meme coins and dog coins? Or is that supply more distributed so that the wealthy are only holding maybe 11% like in Bitcoin? They're going to be more interested. Regulators like a distributed, healthy financial ecosystem. They want to know that those markets are not subject to those whale manipulations. If you look at early Bitcoin, just go look at the charts in 2011 and 2012. There weren't even charts before that, really, that you can find on many places. And those oscillations are insane because when you have a fixed supply asset, not all cryptos are fixed supply, but not just fixed supply, but a small market cap, it's like so easy to just pump and dump that price. So easy to do. And that's why like Shiba's pumping so easily, or some of these other ones, when they have a small market cap, you can move that much more easily. Bitcoin at 60K, it's going to take more work because Bitcoin at 60K is like $1.1 trillion market capitalization. It's gigantic.
But no, I mean,
I'm going on a tangent like I do.
It's important to understand this though, because I keep seeing a lot of news about how Bitcoin only pumped up this much, and all these other ones percentage wise are going up. But again, The important thing to understand is that their market cap is a lot smaller, so it's a lot easier to go up by 50% or 25% or whatever the numbers are. So that's important to keep in mind.
And to the other families out there,
investing.
guys. I'm sorry, I didn't mean to interrupt you. Go ahead.
Well, I was just saying when you're investing.
Yeah, but I want to make an important point to the other dads and moms and families out there is like, I know we want to change the lives of our families, and we are all very like impatient. We've been through a great financial crisis and now this global health crisis as well. Given all that, that's pushing people out further to the risk curve. And people think that Bitcoin is the same as a meme coin. They're not the same. Okay, guys, they're not on the same level in terms of the risk reward, the Sharpe ratio. You need to look at these financial metrics. You have to understand, for every dollar of capital I invest in an asset, like what level of risk am I willing to assume with that dollar for the return I'm going to get. And, Bitcoin may not pump as much, but like your risk of losing all of it is a lot less. So think long term. Please think sustainably. Think about your families, okay?
Another thing to think about when we're talking about long term is look at which cryptocurrencies do have institutional investment, okay? Because when you're looking at a large company, when they invest in, say, like the stock market or companies or cryptocurrency, they're looking to invest not for the short term, but for the long term. They're holding for like 10 years. So you need to think about if there's nobody that's big investing institutionally in a meme coin, then that shows that they don't believe in it being around that long.
Everyone loves to use Michael Saylor as the example, and I'm going to do it too. He talks about his 100-year time horizon. Maybe that's a bit extreme, but like, why are we not thinking about 100-year time horizons? Why are we not thinking about our kids' kids? We should be thinking about that. And maybe 100 years is too much, but we should. The institutions think in at least 5 to 10 year kind of timelines. They have done their research to the extent of, okay, where's a good entry point? Where's a good exit point? They've done their research to the extent of, do we think this has long-term capital appreciation potential? Yes. Does it seem to follow some kind of mathematical cycles? Yeah, we've looked at stock to flow. We've made our analysts look at it a little bit. Maybe it's not going to work out, but it could, right? So they're going to make a percentage risk on that, okay? But it's a percentage risk, and it's based on the fact that they also know, like any of us who've been in this game a long time know, that you need to at least make a 4-year long-term investment in Bitcoin, especially if you're buying a top, okay, or potential top, because you don't know.
Yeah, none of us know when the top or bottom is. So anyway, so let's get back. I mean, this is all important, but it's important to talk about, so it's okay. So the next one we want to look at is the Swiss Stock Exchange. It's called an ETP, but it's basically an ETF. So that one is also tracks the price of Bitcoin and is physically backed. Really important to note that. So they listed it on the Swiss Stock Exchange of 6. They announced it, and it tracks the price of Bitcoin physically backed, meaning the group actually holds the underlying cryptocurrency. So, and then they later talked about with the new product, investors gain access to 100 different crypto products trading on our platform, and they have more opportunities to diversify. So obviously they have more than just Bitcoin.
That's pretty cool.
Yeah. So just an interesting, because I had no idea, because when I looked and did my research, all people kept saying was European ETFs. So it took some digging for me to find which countries are actually allowing ETFs.
But we're getting these physically backed ETFs. And if you're a United States investor, the SEC is trying to protect the everyday investor. That's an intent, right? That's the intention. We believe the intention is good. However, I just want to say that in pragmatic reality, what's occurring is, like Gary Gensler and these folks are kind of afraid to allow us to get access to this spot ETF market, okay? But what does that actually do? Well, it's giving an unfair advantage to the wealthy individuals in the United States, because wealthy hedge funds are investing in the Canadian, exchange traded products and ETFs. They can put that money into these other markets where they have a physically backed ETF, where they have safe custody, where they have a regulatory framework, and they're protected, but we're not high net worth, so we can't get access to physically backed. We have to go buy Bitcoin on Coinbase and hope it doesn't get hacked, or that we're using cold storage properly. best of all, obviously, is your own flash drive and your own keys and all that. A Ledger or Nano. Anyway, go ahead.
So we can come back to that actually at the end, because I was that you reminded me I need to go back to the Canada article, because there is a way to access the Canadian ETFs. They have anyway, so I'll show you later. So another European that I had to look for, a country that has their own ETP or ETF, is the German Stock Exchange. It's a London-based group that has that, and it's trading that product on Germany's Xetra digital stock exchange. So this means that traders in the UK, Italy, and Austria also have access to that product. So when they say European, they're talking about Swiss, Germany, and those countries having access to ETFs. So this one tracks the price of Bitcoin and is physically backed by the cryptocurrency. And the Bitcoin will be held in cold storage by digital asset custodians, BitGo. So again, another group of countries that have access to direct investment.
Guys, I just heard yesterday, Royal Dutch Shell, one of the largest institutional investors in the Netherlands, pulled its own money out of that because investing in the oil economy is not like a good business strategy anymore. The ESG doesn't look good, and investors are pulling out. So when a large institutional investor in a country like that is pulling out, I mean, you can see this in the German-speaking world, in the Dutch-speaking world, that part of Europe. I think the tides are turning very much in favor of cryptocurrency, thinking about how crypto assets can be leveraged in conjunction with their version of a Green New Deal that they're going through there in Europe. Because these guys are thinking about climate, and they're very much thinking about what the new financial system is going to look like. I mean, we're talking about Switzerland, guys. Switzerland has a lot of banking experience. Some of the world's largest corporations hail from there, like Nestle. So, pay attention to what's going on in Switzerland and Germany.
Yeah, they have a lot of power. Mm-hmm. So that was all for that one. And
Not to mention the tax advantages in Germany.
Yeah.
They don't tax Bitcoin in the same way, if it's long term, if I recall.
So the last thing we wanted to talk about in terms of international ETFs is Brazil's. It's the first 100% Bitcoin exchange traded fund to be approved anywhere in Latin America. Okay, so we've got it in the Middle East, Europe, and Australia now, and now in Latin America. Also, I mean, I have other news that I could share about Brazil that's interesting, but they're talking about making it possible to buy like houses, McDonald's, everything in Bitcoin. And there's the potential that there is talk of them actually doing what El Salvador did. I've read a couple of articles. They're hinting at it. It's not been done yet, but, just a thought.
You guys, even today, Wharton Business School in Pennsylvania announced, I mean, that's top 1-2 debatably business school in the world, okay? And they announced that they're doing a new blockchain digital asset program that students can pay for with Bitcoin and Ethereum. I mean, the writing's on the wall. Yeah.
So let's go back really quick to that Canadian one, because I wanted to talk about, where was it? Okay. Let's see. Field futures. I think this is the one that was talking about it. Let's see. Yeah, here it is. So why is it doing that? Yeah, there we go. For US dollars. Okay, so Evolve down here. Evolve launched a similar version of those ETFs the same week for under EBIT for Canadian dollars and EBIT-U for US dollars. Next came the CI Galaxy Bitcoin ETF for Canadian dollars and BTCX-U for US dollars. So I'm assuming that's a way that someone in the US could use US money to invest in the Canadian ETFs. So that might be a way to get around it for regular investors, but we'd have to look into that.
Yeah, that's interesting.
Yeah, so
I don't know if it's for regular investors though.
That's the question, but we'll have to look at that for the next time, because that was the question we were talking about earlier.
And even if it is accessible to regular investors, if it's trading OTC, if it's trading like on certain
platforms,
the way they trade stuff like on Fidelity or Ally Bank, where we use stuff, they'll tell you that sometimes you search for certain stock tickers and you can't even find them. So I don't know why that is, but they exist and you can't find them.
Probably because, again, there's that access denied. Denied. You're not rich enough.
That's why we're getting into Chris. Why we're creating, guys. That's why the crypto ecosystem specifically Bitcoin, is very important. And I want to also remind everybody that the Taproot upgrade is coming next month for Bitcoin. That's going to put DeFi on Bitcoin. That's going to give you enhanced privacy protections for your transactions. And this is good for the ecosystem of cryptocurrency, because remember, Bitcoin is the most decentralized asset in the crypto asset space. You know, really, you always have this trade-off in crypto assets. People don't talk about it, but if you take a course in blockchain, if you study actually trying to program, like in Solidity, which is the programming language used for Ethereum, you learn about these trade-offs. Okay, they're sort of like the laws of physics for blockchain. And the more decentralized you are, there's going to be that trade-off where it's going to require mining that's more energy intensive, perhaps. At least that's the only way we've found it so far. So we always, of course, applaud the efforts of Ethereum, and I hope that it's successful in finding ways to mitigate the energy issues while providing some semblance of decentralization and good security. But I don't see a substitute yet on a technical level for Bitcoin. That's why I'm a maxi. But we love them all.
Anyway, so if you like this and
keep coming, yeah, if
keep
you
coming back,
especially if you like tangents. That's what I wanted to say, because today I'm extremely incoherent. I hijacked your episode here.
Yeah, that's okay. I do the research, and he has a lot more experience. I like to talk about the international aspect, or again, if you have crypto stories that are positive, just share with us, because I'd like to talk more about that too.
Yeah, please like the content and subscribe and share it with others. We do not create this content to make money. We don't run any advertisements on it. Our goal is just to really give good education to the community and make sure that people are making wise investment decisions, because they are able to access good analysis and good data. Okay? Again, this isn't financial advice. It's entertainment and it's education. Thanks for tuning in today, and please share your stories with us in the comments.
Thanks.
Thanks.
Have a great day.
Bye.